1989. Tokyo, the real capital of the planet. It seemed the 21st century would belong to Japan. GDP per capita was higher than in America. 8 of the 10 most valuable companies in the world were Japanese. Mitsubishi bought the Rockefeller Center. Japan, risen from the radioactive ashes, had become an export superpower. Toyota, Sony, Panasonic, they pushed American products off the shelves. By the 1980s, Japan controlled almost 70% of the global microchip market. But the U.S. saw this success as economic aggression. America had no intention of losing. It wasn't an accident, it was an execution. In 1985, the Plaza Accord was signed. Washington demanded that Japan strengthen the yen, and Japan had no choice. Within a year, the currency surged by 50%, and Japanese exports collapsed. To save the economy, the Bank of Japan slashed interest rates to near zero. The country was flooded with cheap money. The stock market and real estate soared. By 1989, the land beneath the Imperial Palace in Tokyo was worth more than all of California. But when rates were raised again, the bubble burst. The stock market lost 80% of its value. The lost decade began, and it never truly ended. The government bailed out every bank and company, creating a zombie economy, businesses that neither live nor die. Today, Japan is a ghost nation. The economy hasn't grown in over 30 years. Innovation is suffocated by bureaucracy. The country slept through the internet, smartphones, and artificial intelligence. And the worst wound? Demography. A third of the population is over 65. Japan is slowly dying. But this ghost still keeps its finger on the nuclear button of the world economy. For decades, cheap yen fueled global markets. Now, as Japan raises its interest rates, investors are forced to sell assets worldwide. And if Japan starts dumping over $1 trillion in U.S. bonds, the global economy could collapse. Japan's story isn't an exception, it's a warning. We're all standing behind it, in the same line.